Good afternoon, everyone. This is Trader Tim coming to you from eminimine.com. Today is Monday, February 4th, 2019, doing a market analysis on the ES to kick off this week of trading. First thing you'll notice in the daily chart is today we have broken the 61.8 of the full halfway back short from highs all the way down to lows. And I know there's been a lot of positive talk in the media and things like that, but it would not surprise me if we, maybe we get another little push higher, but if we were to pull back either halfway, or it really wouldn't surprise me if we came all the way back down to 23.75 and made a double bottom here. Now, we've got news-wise for the week, the GDP that was supposed to be last week is now going to be February 21st, according to the BEA website. So, with that kind of lingering, having the Fed meeting out of the way is good. That definitely adds some certainty. The markets like that, and we've gone up nicely Wednesday, Thursday, Friday, and then today. So just want everyone to be, a little bit cautious in terms of not getting caught off guard. I think there's going to be some great trading opportunities this week. Today was it was okay. This morning, I've got the high and the low from the first 30 minutes marked. This is actually supposed to be down lower. Right here. And so you can see how we dipped below the first 30-minute range. We got a low tick that lined up with low price, and then we were off to the races pretty much for the day. But look at how horizontal this first really hour 15 of the day was. And so there may be some mixed signals, if you will, where if you were just looking at the first hour of the day, you'd say, "Wow, this is a pretty range-bound market." We went from the bottom of the range to the top of the range, back to the bottom, dipped below just a bit, and then back to the top before making a breakout. So if you're ever concerned with is this going to be a trend day? Is this going to be a reversal day? Start by marking those first 30-minute range of the day, the high and the low for the first 30 minutes. And this guy got moved too. I'm not sure why. It's supposed to be right there. Start by marking the high and the low for the first 30 minutes so that you can have some reference points, because more than just placing trades intraday, you want to be looking for the most opportune times to place those trades. And so, like, if we look at, where is yesterday's high and yesterday's low, whatever the prior day is, what is today's first 30-minute range high and first 30-minute range low? Those are going to be places where the market's either going to break out, or it's going to come down into support. It's going to break out to the upside, or it's going to knock its head on resistance. And you can see when the market breaks out above or below, a lot of times we'll end up coming back to that level as support. And you can use that as an opportunity to let the market break out, show its cards, and then get in a trade on the retest at the 50% retracement, and then just by trailing your stop on the way up, or trailing the next setups 61.8, you can just trail your stop. Get into one trade and then just start trailing your stop up underneath the 61.8 and kind of riding it out as long as you can. So should be a pretty decent week this week, regardless if it's up a little bit more or down, or if we take off to the upside too. There's plenty of room for us to go in either direction, whether we break through some of these swing highs up here or roll over and get some big body candles to the downside. Should be some good trading opportunities to come. Tomorrow, Tuesday, I'll be doing a webinar in the afternoon in addition to the live trading session. And you can check out the information on the webinar just on the homepage at eminimind.com. That first link, February webinars, has the link in there. And the trading room, as always, is at eminimind.com/VIP. So I hope everyone has a great week of trading, and we'll talk to you soon.